Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. California now on shelter-in-place orders across the state. Illinois could be next. New York ordering all non-essential workers to stay home. Meantime, violent swings in the U.S. market today. I want to bring in our Bloomberg What You Miss co-anchor Romaine Bostick to break it down. Romaine, walk us through the weekly sell-off.
Yeah, Emily, I mean, it was really kind of a dour week. I mean, of course, we started off with that big sell-off on Monday. You did see some dip buyers come back in the middle of the week, sort of looking for what at least appeared to some to be bargains. But by the time we got today, there was this general sense here that the economic downturn that we're headed for, a lot of folks are basically assuming that that's going to be prolonged more than just a quarter. This could drag on through most of the year. You saw the S&P 500 drop 15% on the week. It's now down 32% from that February 19th high, and it was really indiscriminate across the board. You had all 11 sectors in the red, all 11 sectors down more than 10%. So this wasn't just some folks selling a few things here and there. This was pretty much a liquidation week. And I want to point out, too, Emily, that at the close of trading today at 4 p.m. here in New York, we normally have this shot of the New York Stock Exchange where we normally see people ringing the bell. It's generally a celebratory type of environment. Today we saw one man up there ringing the bell alone. It was a very somber sort of mood. We know that the NYSE is going to shut those floor operations after today. It will only be electronic trading when we come back on Monday. And it really kind of gave a sense here, Emily, that we are in for the long haul right now with regards to some of the pain that we're going through.
So talk to us a little bit about volume and what that indicates in terms of sentiment.
So keep in mind on a typical day and across all of the U.S. markets, we have about 7 billion or so shares of equity shares will swap hands on a daily basis. Over the past 20 days, we've had more than 10 billion shares on each day. Today, we were above 18 billion. Keep in mind, the record is something like 19.7, basically about 20 billion shares. And that was back in October of 2008, right at as the financial crisis was really exploding. And there was all this concern about whether or not governments out there had enough firepower to really deal with the economic impact. The type of volume that you're seeing today is reminiscent of that volume that we saw back then. Again, it's this general sense here, not just that things are bad, but that a lot of folks are really concerned about what the government can do and whether what the government will do will be enough to keep us from seeing the worst of these bear case scenarios.
All right, Romaine, hang on. I want to bring in Victoria Fernandez, Crossmark Global Investments Chief Market Strategist. Victoria, look, we're looking at more state shutdowns, more businesses disrupted across the country, around the world. What's your view on just how bad this is going to get?
Well, I don't think we know the answer to that right now, Emily, and that's the issue. People are very uncertain, and if there's one thing that we know that the markets don't like, it's uncertainty, and we're surrounded by it right now. So you would think that the Federal Reserve coming in, and not just the Federal Reserve, but other central banks around the world, all of the stimulus that they're putting in there, all of that monetary stimulus. I mean, they came out today talking about additional mortgage-backed securities they're going to do. I think they did over $300 billion in purchases this week. They announced another $100 billion for next week. You have the administration coming out and talking about student loan forgiveness for a certain period of time and ensuring that small businesses have loans to do payroll, and those will be forgiven if they maintain their payroll. You have all of these things coming to market, and yet we still have a 4 or 5% down day. I think just because people are so concerned because they don't know what is going to happen. And until we hit what we consider probably the peak number of cases, I would guess this volatility is going to continue.
And investors are making choices right now. I mean, we see day after day the markets going deeper and deeper into the red. I mean, is that misguided?
Well, I think it's overdone for sure. I mean, if you look at this, people are trying to make comparisons to other times when we've had market downfalls. I think it's really hard to do that at this point. This is more of a health crisis. It started as a health crisis and it has developed into more of a financial crisis because people are not just doing a flight to quality, they're actually doing a flight to cash. So we saw everything moving down. Equities moved down. Then they were going to their more liquid assets because liquidity was drying up. So gold was down, treasuries were down a little bit this week. You have a broad spectrum because people are trying to sell in that panic to get to cash. What we're really talking to our clients about is to take a step back, take that longer term outlook, realize what your financial goals are, and make sure that you're diversified and well prepared for this volatility, that you can ride through that. Now, you can use it to your advantage, pick a few names maybe that have come down in price that you'd like to add to your portfolio, but we don't recommend people just going 100% to cash and staying there, because trying to time the market is a very difficult thing to do and historically does not work in your favor.
Yeah, Victoria, well said. You definitely don't want to try to time this market or any other. I'm wondering, you mentioned this idea of sort of the financial pressures here that we saw in this market, particularly at the start of this week. There is the concern here, and I heard this from a lot of strategists and investors I talked to this week, that there was concern that this ends up becoming a credit crisis. And that seems to be where the fear is right now. It isn't so much about, oh, asset prices are down, we're headed for doom. It's this idea that this then trickles down through real companies and real businesses that aren't able to survive because they were either too leveraged or they don't have the cash flow coming in. Do you get any sense that that's where we're headed?
Well, Romain, I think you're absolutely right in the sense that this liquidity issue that we had earlier this week has developed into a credit issue. People were really concerned about the repo market, the money markets. The Fed has stepped in to try to alleviate that. But then we saw develop more into the credit issue with shutdowns going across the country. You guys mentioned a little bit earlier, California, New York, Illinois, all of these places shutting down. Even here in Houston, the restaurants and the businesses shutting down. That leads to concern on, are these businesses, these corporations going to be able to pay their principal and their income on their bonds, leading to that credit issue. And we've got earnings coming up. And you look at people that are saying we're probably going to have an earnings recession, not necessarily a true recession based on GDP, but earnings really have come down the expectations for both Q1 and Q2. So I think the credit issue that people are looking at, it's a valid concern. But if the market stabilizes with the steps that the Fed is doing and that we're seeing on monetary policy and fiscal policy together, then I think we can get through this credit issue once we see, like I said, the cases start to peak and go on the downside.
Yeah, so just on a quickly, Victoria, on a sector basis, I mean, you're down there in Houston. There's obviously a lot of focus on the energy industry, particularly with oil prices coming down as much as they had. We saw this week a 29% drop in NYMEX crude. I'm just wondering that when you look at the structure of the energy companies, the way that they were leveraged and where oil prices are, and the idea that what's going on with oil prices is to a certain extent divorced from the coronavirus crisis. There's obviously this sort of stare down between Saudi Arabia and Russia. Do you think that there are certain industries like this, certain sectors like this, that may be more vulnerable than others?
Well, we're seeing, if you look at the sectors and how they're performing in the markets, obviously energy and financials are two of the sectors that have been hit the hardest. When we look at energy, as you mentioned, they are extremely leveraged. And so you need to be very particular when you're looking at the names that you hold within the energy sector. Really pay attention to those balance sheets. And that's going to be across the board. Look at companies that have strong balance sheets, strong cash flows, that have enough kind of arrows in their quiver, I guess, in order to make it through volatile times. That's going to be regardless of what sector, but energy and financials have taken a big hit.
Victoria, what are your views on tech? Obviously, you've got Amazon, potentially Netflix in a different league. Then there's Facebook and Google, which depend on the ad industry. Then, of course, there's Apple, which has this global supply chain and is also sort of a measure of general consumer sentiment. How do you break that down?
Well, when we're looking at these names, it's funny that you mentioned those particular names. We've actually added to those positions in our large cap portfolio over the last week or week and a half. These names have come down extremely low in their pricing relative to where they were a couple months ago. So we're actually taking advantage to go in and add to some of these tech names that we think, when you look at 5G, when you look at probably a new way of people working after this coronavirus issue that we go through, more people working at home. ServiceNow is a name that we added to our portfolio, things that are cloud-based like that. Look for opportunities in these names. Yes, everything is volatile right now, but these are names that will do better going forward, along with the Apples and the Amazons.
Well, we're going to be interviewing the CFO of Zoom Video later this hour to talk more about some of that. Victoria Fernandez, Crossmark Global Investments, thank you so much, as well as Bloomberg's Romain Bostick. Stay with us. Coming up, we're going to talk about the flurry of activity in Washington as the Senate pushes to expand its coronavirus economic rescue plan. More on that coming up. This is Bloomberg. U.S. Treasury Secretary Steven Mnuchin thinks the Senate's coronavirus rescue plan is too small and wants to push more direct payments to Americans. For more on what's happening in Washington right now, what's happened so far this week, I want to bring in Bloomberg's Anna Edgerton from Washington. Anna, walk us through, first of all, what Congress actually did this week and what they are planning to do.
So this bill that they're talking about right now that we're estimating will cost more than $1 trillion is what we're calling phase 3. The first phase was a supplemental appropriations bill that was worth about $8 billion that they passed last week and President Trump signed into law. Then they passed the House bill that was more focused on things like paid sick leave, free virus testing, expanded Medicaid options for low-income families. That was phase 2. So this is going to be phase 3, and phase 3 is going to be massive. It will be more than $1 trillion, and right now it's kind of getting plussed up. We saw the Republican proposal yesterday, and now we're having Democrats and the White House weigh in and kind of adding things on top of that they think should be included in the bill as well.
When will Americans actually see this money, and how much would it be?
It depends on how quickly they can get the legislation passed. The Congress is not really structured to move quickly, although they're moving at warp speed as far as their usual procedure. So we expect to see hopefully a bipartisan agreement by as soon as tonight, and then that could be passed by the Senate Monday, passed by the House shortly thereafter, and signed by President Trump into law. Then it would take at least 2 or 3 weeks to get that money to American families in the form of tax rebates or checks from the IRS.
Meantime, U.S. Senator Kelly Loeffler in the midst of a major controversy about whether she dumped a ton of stock as a result of a special coronavirus briefing for lawmakers back in January. She was just on Bloomberg defending this. Let's take a quick listen to what she had to say.
I have no involvement with the investment activities conducted by third-party advisors. I made that decision before coming into the Senate. In fact, I made that decision in the private sector where I worked in the investment management business. And many of your viewers will know that the strict rules under the SEC prohibit things like insider trading on material non-public information. These are core tenets. I'm the only CFA in the Senate. I know exactly what is required under the law.
Senator Richard Burr also under scrutiny for selling stock in February. This, as you know, Anna, we're talking about Americans getting a few hundred, maybe $1,000 from the government. Talk to us about the kerfuffle this is kicking up in Washington.
Yeah, the question is, did they do anything illegal? And then also, how does it look? Kelly Loeffler was very clear that she didn't do anything illegal, that she has third-party advisors handling all of her investment accounts. And she said that she doesn't even talk to those advisors, that there's a staff member in her family office that is the go-between between her and her advisors. So she said that she absolutely did not do anything illegal. However, it does look bad, especially at this time when Americans are worried about their physical safety in terms of health and also kind of economic security in terms of what their own investment accounts look like and what their retirement accounts look like. Also for Richard Burr, not a good look, when you're talking about selling as much as $1.6 million worth of stock in a matter of weeks before this big market crash that we've seen over the past 2 weeks. That's just not a good look, even if he didn't do anything illegal.
Right. Certainly not what Americans want to hear as they're losing jobs, losing hours. Okay, Bloomberg's Anna Edgerton in Washington. Anna, thank you so much for that update. Meantime, I want to update everyone on Tesla, first Tesla production, as well as Tesla's intention to start manufacturing ventilators as the coronavirus outbreak continues to expand across the U.S. and around the world. I want to bring in Bloomberg's Ed Ledlow, who's actually been tweeting today with Elon Musk. Ed, tell us a little bit about what Musk is saying now about their ventilator plans.
So Musk reiterated this line that Tesla is working on ventilators. He said, we are working on ventilators, but he followed up in a separate tweet later on, which said SpaceX is also working on ventilators. So I'm taking from his first tweet that he originally meant Tesla. And I asked him in a tweet, whether this idea that he'll make ventilators is based on the idea that Tesla and SpaceX have some limited expertise and some experience in building air filter products. In the Tesla Model S, Model X, there's this HEPA filter high efficiency particulate filter, which Tesla says, is 100 times better than an air filter, but it is not a ventilator. SpaceX works with NASA to do the life support system, which includes air filters and air pumps for Crew Dragon, the vessel which will take human beings up to the International Space Station. So that's why I asked him. But all we have is Elon's word for it on Twitter. We don't have any evidence from Tesla or from SpaceX directly that this ventilator research or production is actually happening. And that's why I reached out to him on Twitter.
Right. And I just want to quote his tweet to you. He says, yes, we're working on ventilators, even though I think they probably won't be needed. He's been out there on Twitter downplaying the seriousness of this pandemic. And, everybody seems to be an armchair epidemiologist these days. But I just want to emphasize that Elon Musk doesn't necessarily know better than, the medical experts what the coronavirus curve is going to look like or not, right?
Correct. So he has reiterated more than once that even though he says Tesla and SpaceX are working on ventilators, he reiterates that he doesn't see a need for them. And what all of this stems from is policymakers. Today, you had President Trump talking about the need for ventilators, New York Governor Cuomo talking about the need for ventilators. The CEOs of companies in Europe and here in the States are saying that they are not making enough ventilators, that they're not able to keep up with demand. Elon Musk says on Twitter that he's skeptical that they'll need to make ventilators. He'll say they'll only do it if there's a shortage, which are these kind of contradicting messages. And again, Elon Musk, all we reporting on are his tweets, but he says that he expects no cases of the coronavirus, new cases by the end of April. But Elon Musk, at the end of the day, is not presenting any evidence or any, action on his part. All we have to go on are the tweets, because when I contact Tesla and SpaceX to ask what they're doing in real terms, whether now that Fremont stopped producing cars,
right,
it will now produce ventilators, we're not getting any response.
Right. And just a reminder, Elon Musk is not a doctor. Okay, Bloomberg's Ed Ludlow, thank you so much. Coming up, we are going to talk about Zoom Video, one of the companies that is keeping us all connected in the midst of these statewide shelter-in-place orders. We're going to speak to the CFO of Zoom Video. Coming up, this is Bloomberg. The coronavirus outbreak is reshaping the way we work, and Zoom Video is helping to make that happen. Zoom Video shares skyrocketing this week, more than 20% as the S&P plunged. On the other hand, I want to bring in Kelly Steckelberg, the CFO of Zoom Video now from San Jose. Kelly, thank you so much for joining us. So first of all, give us an idea just how much new activity you're seeing. I had my mom today asking me to Zoom. Talk to us about just what kind of growth you've seen in the last week.
Yeah, it's been a really amazing time to see how people are using new and unique opportunities for using Zoom. First of all, we've been focused on supporting the needs of schools. We are currently providing free services for K through 12 schools in 12 countries around the globe, as we're seeing students everywhere be impacted by the stay-at-home needs today. And then there's other really amazing and heartwarming human interest aspects to this as well. People like a 13-year-old in New York having his bar mitzvah via Zoom. And also we heard today about a CBS writer's room bringing up Zoom so that they could continue focusing on producing their TV show. So lots of opportunities around the globe for Zoom to be helping. And we're happy and grateful to be in this unique position to help people stay connected in this disrupted environment.
Can you give me any numbers? I mean, according to outside estimates, Zoom downloads doubled last week. Anything new for this week, as we're seeing not just businesses, but as you say, schools and consumers, people at home starting to use it?
Yeah, we aren't disclosing exactly those numbers, but what I can tell you is we have provided Zoom to over 25,000 K through 12 schools around the globe. So very happy to be able to enable them while they're all learning from home. And we're doing everything we can to ensure that anybody else that has a need for Zoom, that we're here for them.
So how much of a struggle is it to keep Zoom up and running, to deal with the demand, the bandwidth that it takes to keep all of this going? I mean, we've heard anecdotal stories about lines getting clogged or lines dropping, just I imagine because of the sheer volume of people on the service.
So we have 19 data centers around the globe, and these data centers have been built to operate at 50% of peak capacity, not even average capacity, but peak capacity. And in order to be able to be situated for a situation just like this. And they're architected so that if one of them is having a surge in traffic, it can share the load around the globe, around the others, 18 data centers. And so what that has enabled us to do is to proactively be able to meet the demands and watch the traffic as it's coming and support even the increased usage that we've been seeing.
So are you seeing an uptick in conversion from free to paid users during this time?
It's really early to see and to say at this point in time. We have also, as you probably heard, lifted the 40-minute limit on our free product in China many weeks ago. And what we want to do is just ensure that anybody that has a need for the product is able to get it. And what we hope is this is an opportunity for people that hadn't used Zoom before. As you said, your mom is a perfect example of this, to get to experience it. We live on Zoom every single day, of course, in our company, but other companies, organizations, even individuals are seeing new opportunities for using it. And we hope that they continue to embrace it even after we go back to some sense of normalcy, that this becomes the way that people communicate. We really believe that video is the future of communications, and this is an opportunity for others to experience it the way that we do every day around the globe.
And quickly, you've talked about how doctors in China were using this to communicate with patients. Are you seeing any uptick in the use of Zoom in the U.S. healthcare sector or in Europe between doctors and patients?
We certainly have seen, as we've seen in EDU, we've also seen an uptick in healthcare as well. As you say, it provides a safe way for doctors to continue to communicate with patients and or other healthcare providers around the globe, doing it the way that I'm communicating with you from my home or from other safe environments without putting themselves at risk.
Right. All right. Well, Kelly Stackelberg, CFO of Zoom Video, thank you so much for joining us and for helping humans around the world stay connected during this time. Coming up, we're going to be talking about Amazon, an update on delivery, Prime Pantry, and why Jeff Bezos might be calling President Trump. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. Amazon Web Services is committing $20 million to speed up COVID-19 research when it comes to diagnostics and to detection. I want to bring in Spencer Soper, joins us now from Seattle, who covers Amazon for Bloomberg. Spencer, tell us a little bit more about this investment.
Yeah, so they're basically opening it up to research institutions that are trying to create rapid tests and at-home tests for the virus. So still very early, but it's AWS with its vast data applications can be a useful tool in this, and Amazon wants to be, helping in any way it can.
Meantime, during the White House press conference today on the coronavirus pandemic, a reporter asked about Jeff Bezos calling President Trump, saying that Bezos had been trying to reach the president day after day after day. Do we know why Jeff Bezos is trying to reach President Trump?
No, imagine, people can think of a lot of things. My best guess would just be that Amazon wants to be seen as this indispensable service right now, as a lifeline to especially vulnerable populations that have to quarantine and basically the general public as they quarantine, that Amazon can be one of these tools used to get supplies to people as they're needed. But there's also question and pressure about protecting their workers. So Amazon definitely has to have some lobbying going on to remain in operation through this pandemic as much as it can.
Meantime, Spencer, if you try to get anything on Amazon right now, delivery times are incredibly delayed. Prime Pantry was temporarily shut down yesterday. Give us an update. Is that back up and running to speed as usual?
No, I haven't seen any indication that it's back up to speed. A lot of this are like these windows, so it's like you can schedule a delivery within a 2-hour window, and people are having to wait days to schedule those windows as people continue to, uh, go online for the essentials that they need. So Amazon has switched to prioritize just essential things like household goods and pet food and grocery, that sort of thing, in terms of what it is accepting in its warehouses from other sellers. So it looks like these kind of things are going to continue happening sometime.
Let's get an update on workers. Senator Elizabeth Warren has been raising alarm bells about how Amazon and Walmart workers are being treated. What's the latest in terms of your investigations into what's happening at the warehouses, what's happening in the delivery trucks?
Yeah, so there will be an event shortly where some workers are going to discuss their concerns, workers at Walmart and at Amazon, and basically just emphasizing that they need supplies to stay safe, and they also need protections like sick leave and that sort of thing in the event that they are out of work. So that's what they'll be lobbying for. And Walmart and Amazon and most companies are, putting out messaging and doing as best they can. But as we look closer and speak to workers, you find there are this thing has been so fast paced, and that there's definitely gaps. And there was one instance where we interviewed some delivery drivers in California for Amazon who said that they got a single wipe to wipe down their vans one morning at the start of their shift, and they thought it was a joke, and then realized it wasn't, and had to like strategize how to best use this individual wipe. And then we're also seeing Amazon employees in Whole Foods and in one of their delivery facilities in New York having confirmed cases of the virus. And so there's just a lot of panic about what is the priority. Is it about protecting us and keeping us from getting sick, or is it about continuing to sell goods?
You've also been on the phone talking to sellers, and we really haven't talked much about them. We've talked a lot about workers, a lot about the consumers receiving their goods, but how are sellers faring in all of this?
Well, it's really going to depend on the category. I spoke with one seller today who's doing quite well, sells toys and games, and a lot of parents are shopping for those kind of things to keep their kids occupied or even keep themselves occupied as they're, since everybody's kind of cooped up at home. Other folks having a tougher time, depending on the category, things like fashion and jewelry and those sort of things that people just are not top of mind right now. And it's also going to be difficult as inventories run low if Amazon doesn't open up its facilities for non-essential goods, because so many sellers rely on Amazon to do fulfillment for them. And if Amazon's dedicating all of its delivery capacity and warehouse space simply for essential goods, that shuts a lot of inventory out of its pipeline.
All right, Bloomberg Spencer Soper in Seattle. Spencer, thank you so much for all of that detail and insight there. I want to talk a little bit more about Amazon with Michael Pachter of Wedbush Securities. Michael, curious for your view on Amazon, because obviously it's a measure of consumer sentiment. And if there is a giant economic downturn, as we're seeing already, that doesn't bode well for Amazon. That said, it is the source of essential items. People depend on it. How does that translate to a stock perspective?
I think Spencer is right that Bezos probably was reaching out to the president to see how Amazon could be helpful. What we're seeing, when you have an economic downturn, normally it just everybody spends a little bit less. So we have a 2 or 3% decline in GDP. Everybody spends 2 or 3% less. Everybody gets hurt. In this particular downturn, it's probably going to be deeper than 2 or 3%. And it's targeted. It's, travel. Nobody's traveling. We have no tourism. So hotels and airlines and cruise lines are gone. I mean, they're not going to have any revenue. Retail is closing. In-restaurant dining is closing. And so my guess is that's 10%, maybe 20% of the economy. I don't know how deep the recession is, but where are those dollars going? Because we're not stopping eating. We're going to keep eating. And you can see lines at the grocery store, and you can see Amazon's inability to deliver, which means that they're picking up share from physical retail that's losing share. And in particular, I think Amazon grocery is really, really thriving. So my bias is that, sure, people who lose their jobs are going to buy less, and that is unfortunate, and that's going to hit all retail. But the people who are largely losing jobs are small business owners and their workers. So it's restaurant workers. School teachers are going to keep getting paid even though they're not going to class. Those people are going to continue to consume. So my bias is Amazon gets hit a lot less severely than everybody else. And I think that these war stories about, taking, we tried to do grocery. Our first delivery date was June 11th. So, 3 months out. The idea that you can't get anything on Amazon coupled with hiring 100,000 additional workers tells me that demand for Amazon's services are going up. So I would guess they actually benefit from this pandemic, which I don't think that's their intention. But as Spencer pointed out, only handling essential goods, their fulfillment centers are taxed to bursting, and they can't sell everything. So again, yeah, I think that the toy, third-party vendor can't get his toys run through the warehouse because they're busy trying to stock with groceries and essentials. And again, good for Amazon, bad for everybody else.
Exactly. I mean, I've got kids at home. I've been trying to buy books, trying to buy a whiteboard, school supplies, and I haven't been able to get those things. And certainly it doesn't compare to things like hand sanitizer and toilet paper, but you can just imagine the backlog that this is creating for Amazon. What about some of the other names, Michael, that you cover? Netflix, for example, which I'll admit I've also used a few times this week just to get through the day.
Clearly the investor perception is that Netflix is a huge beneficiary. And I think that they are. I'm not sure that it means their stock is worth more, but there's two things we're going to do no matter what. We're going to eat and we're going to entertain ourselves. And so, as I said earlier, we shifted food consumption from restaurants eating out into the home. We're shifting entertainment consumption from going to movie theaters or sporting events or concerts to watching, events at home. And there's fewer sports on television because they've all been canceled. So we're going to consume either a lot more Bachelorette or a lot more Netflix. They thrive in this kind of environment. So do the video game publishers. Our kids are cooped up. They've got nothing better to do. And we are much, much more tolerant than spending their time playing games. So are, women over 50 playing more Candy Crush, which is great for Activision that owns that brand. Zynga thrives. So I think that, pockets of entertainment are going to benefit immensely. Disney Plus is killing it, but the theme parks are closed. So Disney's not doing great. They can't, and the movie studios aren't selling tickets. So, that's a hard one to invest in. Activision, Electronic Arts, Take-Two, Zynga, easy to invest in. Netflix, like I said, I don't know that they get more subscribers. I do think there's more engagement, but I think they've already saturated the domestic market. So it's unlikely that they're getting a lot more subscribers from staying home.
Meantime, this is an interesting story. After direct conversations between Netflix CEO Reed Hastings and the European Union Commissioner, Netflix has actually reduced the streaming quality in Europe, in particular because the networks there have been so overwhelmed with people working from home, with people trying to watch television, trying to watch Netflix, that Netflix has actually reduced the streaming quality there. Could that actually then have a negative impact on the company?
I doubt it. And, YouTube did the same thing. I think that consumers absolutely understand if the signal starts to buffer. It's not that Netflix sucks, it's that the internet provider is being overwhelmed by consumption. And I think that all of us who are at home doing something we normally wouldn't be doing because we're normally at work, we tolerate the modest interruptions. So no, I don't think so at all.
All right, Wedbush Securities, Michael Pachter, always good to have you here on the show. Thank you so much, Michael, as always, for joining us. Coming up, we are going to zoom into the global supply chain. What is happening now that China is coming out on the other side, and the problem is moving to Southeast Asia, the U.S., and Europe. That's next. This is Bloomberg. Grocery and retail shelves may be empty, but will they be able to restock as the coronavirus pandemic continues to strain the supply chain? I want to bring in the chief economist of Flexport, Phil Levy. Flexport connects more than 10,000 customers with more than 100 suppliers, suppliers across more than 100 countries around the world. Phil, first of all, give us a view on what's happening in the global supply chain right now, because this is no longer just a China issue, or no longer a China issue at all, as the outbreak moves into Southeast Asia and Europe and the United States. Where are you seeing the backlogs?
Yeah, so you're exactly right. It started out very much as a China concern and has spread beyond that. I think one of the things where we're seeing stuff most acutely is that air freight is getting severely constricted. What people may or may not know is that a great deal of air freight travels in the belly of passenger jets. So when you cut off the travel of people between countries, you lose that capacity. And that's where you're starting to see some real restrictions. Ocean freight is still moving reasonably well.
What about air? Obviously, we know the airlines are suffering, and that can be sometimes a backup when other supply chains seize up.
Yeah, it turns out it's very, very difficult and expensive to convert passenger planes to cargo planes. So, and with 50 to 80% of the air freight capacity going with those passenger planes, when people don't want to fly, or when they're not allowed to fly, as we've seen some increasing number of travel restrictions, then those flights go away, and you don't have that capacity. It's a particularly acute problem now, because often when you've had supply chain interruptions, goods that might have been sent by other slower routes, people often turn to air as a way to replenish inventories quickly. So it's a time when you might have been more interested in using air, and it's harder to come by. We're seeing prices go up.
Meantime, President Trump saying earlier today the U.S.-Mexico border is being closed to non-essential travel. The same thing is happening on the U.S.-Canada border. Does that impact the supply chain?
I think they've been cautious and careful to exclude trade in that. So to the extent that goods are moving by train or by truck, they shouldn't have as much difficulty with that. There will also be some air shipments in there, and those will encounter those difficulties as the number of flights are reduced.
So look, we all have friends, family who in the middle of this, they're running to their grocery store, they're stocking up, they are filling their pantries. Should they be doing that? I mean, do we have a real concern that we are not going to be able to get the goods that we need in this country and depend on every day?
Yeah, well, it's certainly an understandable impulse. I think all indications are that there is enough toilet paper being produced. It's a very hard thing for the supply chains when demand all of a sudden skyrockets and they have to meet this all at once. So I think those are the strains we've been seeing, but there haven't been any indications as of yet that things are fundamentally broken there. And it does look like those goods are available. It's just a matter of how quickly can store shelves be restocked.
All right, Flexport's chief economist, Phil Levy, there on the global supply chain. Meantime, we are getting breaking news out of New York now. Of course, earlier today, Governor Cuomo ordered that all non-essential workers across the state stay home. Now we're getting some new information. The governor has been speaking on CNN, saying that the state has only half as many beds as they need to support the rising number of cases in New York State. New York State now has more cases than any other state of the coronavirus. In New York City, also, the cases, they're rising as well. Mayor Bill de Blasio has been speaking. He says New York City now has 5,151 confirmed cases of COVID-19. He's calling New York City the center, the epicenter of the crisis. And that number, more than 5,000 cases in New York City alone, actually about half the cases across the entire country. So we're going to continue to monitor that situation and monitor what the mayor of New York City is saying. Coming up, we're going to be talking more about the impact this economic downturn and the coronavirus outbreak is having on the economy and the tech economy in particular. This is Bloomberg. Breaking news, Mayor Bill de Blasio in New York City continuing to speak about just how the coronavirus outbreak is playing out in the city, saying that New York City now has half of all cases across the United States and more than 2/3 of all the cases in New York State. 5,151 confirmed cases of COVID-19 in New York City. We'll continue to listen in to what the mayor has to say. Meantime, I want to talk a little bit about how the outbreak is impacting the tech economy and Silicon Valley, and bring in Jeff Richards, managing partner at GGV Capital, which is a firm that has a broad portfolio across not just the U.S., but also China. Jeff, thank you so much for joining us. You guys were early investors in China, one of the earliest investors in Alibaba, for example. You also have backed Slack, Airbnb, companies that, are really interesting storylines as this outbreak continues to spread. What did you learn from the coronavirus outbreak in China, and how did it impact your companies there? And what kind of lessons can you bring from that to some of the companies you have here in the United States?
Yeah, it's a great question, Emily, and there is a lot to learn, as I'm sure you guys have reported. China has dealt with this in a pretty effective manner, and for the most part, it looks like their economy will start to rebound in Q2. A couple things that we saw in China and Japan and Singapore and Korea, some of the other Asian countries that were hit hard by this before we were. Number one, the impact is pretty severe, and so we had been coaching our portfolio companies in the U.S. now for several weeks to take this seriously, to expect a pretty significant economic impact. For example, on the enterprise side, we've coached our companies to expect up to an 80% drop in bookings in Q2, which sounds significant, but when you factor in the idea that everybody's going to be working from home for several weeks or months now, it's just hard to get business done. And so that was one of the early things. Two was prepare to work from home. We knew this would be a big impact on U.S. workforces, and that tech companies in particular are well equipped to work from home. But we got to make that transition. And the good news is folks have been using Slack, they've been using Zoom, they've been on the various work from home technologies now for 5+ years with teams around the world. And so for a lot of our companies, this was a slight shift, not a huge shift to going to work from home. The third one is preserve cash. When the market tightens up and we see a crisis in America, cash becomes really important. And so a lot of our companies are very well capitalized. Many of them have 12, 18, 24 months of runway, which we're thrilled with, because things get tough. When the public market comes back and pulls down, you have an immediate impact on the private market, and we're certainly seeing that.
So not only are folks working from home, they're having to work through this very critical time, trying to decide, can they keep hiring? Should they have layoffs? Will they survive? I mean, how do you even begin to coach some of your CEOs and founders on how to deal with this? This is not just a public health crisis, but also potentially the life or death of their company.
Yeah, it's hard. It's really hard, and it's very personal. I've done probably 30 calls with CEOs and founders over the last 10 days. And, the one thing that really hits home for all of us, I think, is it's very personal. We all have families, we have kids, we have extended families that we're concerned about. And there's a certain amount of fear and doubt that creeps into your mind as a consumer and as a resident in the United States. But as a CEO, there's an especially challenging situation because you've got to sort of compartmentalize that and turn around and leave. You've got to put action plans in place, put leadership plans in place, reconstruct your financial models for the year, focus on survival, focus on getting through this really difficult period, and then also coming into work every day, which oftentimes means going from your kitchen to your living room and saying hello to your children, and then starting the day full of confidence. You've got to be confident. You've got to be in charge. You've got to have your teams responding to you. And so one of the things that we're seeing is people really up the level of communication. A lot of, we're seeing people do virtual happy hours where they're getting people around the world to get together, virtual lunches, they're doing costume contests. But the number one rule of thumb is, as a CEO, be a leader, be confident, and increase the amount of communication because it's hard.
And I understand, Jeff, just quickly, that you've got some fun backdrops that you can toggle between to add some humor into your meetings. What do you got there?
Well, I'll show you a couple. I've got, here's me at In-N-Out. So when I'm feeling hungry, I cruise down to the In-N-Out. I've got this,
Okay.
this is on the gondola at Squaw Valley when I want to feel like I'm in a happy place. And then one of my favorite things is Stagecoach and Coachella down in Fall Desert, and it's unfortunately canceled this year. So I've got the background to remind me.
All right. Well, we will leave it there. Thank you for sharing that with us. Jeff Richards of GGB Capital, thanks so much for joining us. This is Bloomberg Technology.